I used to do it to increase my odds of taking a check. मैंने अपने आप से माफी मांगी, क्लाइंटों से भी माफी मांगी. Do I want to, as a company, use AI to replace my colleague? Absolutely not. If I can't love my colleague, then you should not trust me as a client. The guy's got 800 crores. Okay, has only 120 crores in equity and 38 crores in the most exotic product. He has a wine fund. He has an art fund. Salary minus investment equals spending. ये equation को बदला दोगे तो HNI बनने की संभावना.
So Feroze, first of all, thanks a lot for coming on this podcast. I've been tracking Anand Rathi Wealth from a very long period of time. I've been looking at all your con calls and the way you guys manage it. So first up, big fan from this side. And it's very nice to see you from con calls to actual podcast reality, right? So first of all, thanks a lot for coming on this show.
It's my honor, Shashank. You're embarrassing me by calling yourself my fan. I would say likewise.
Oh, beautiful, beautiful, sir. Now, first thing I want to ask is, Anand Rathi is a listed company, and you are the CEO of that as well, right? So how do you manage this on a day-to-day basis? What do you do on a day-to-day basis?
On a day-to-day basis, of course, there are, when you're running a listed company, there are responsibilities which are sometimes overwhelming. But in a normal day, a normal week, I would say the time is divided between about 20% with client,
okay,
10-15% on terminal,
okay,
and about 30-40% for internal interactions and whatever it's worth, the guidance to the team. And about 10-20% exigencies of, you never plan those, right? If something might happen, you never know. Because a company might have at least 15-17 broader divisions to run, right? When will the operations guy need you? The HR guy will need you, right? There could be some. So basically, it's 20-30% unplanned days, and the rest of it, like I told you, that's how it's distributed.
Wow, very interesting. Now, what I want to do is, you deal a lot with HNIs and Ultra HNIs, from what I know, right? So I want to understand a little from that side. I want you to explain to me, how has your experience been with a HNI and what have you seen with an Ultra HNI?
See, I've seen very varied behavioral patterns. One is their wallet size can determine their behavioral pattern, which is what HNI and Ultra HNI is. Their backdrops have a larger role to play in their behavioral patterns. If there's a professional, it's a different behavioral pattern than a non-professional HNI, right? A business guy, for example, let me frame my thoughts more clearly. Let's assume there are two Ultra HNIs. I would think that there's common behavior, but one Ultra HNI could be a Gujarati businessman.
Okay.
His behavior is going to be dramatically different than a South Indian CXO, right?
Very different.
Why is that different? Especially business people rely more on intuition than math. Professionals rely more on math than intuition. Why is that the case? See, I am a professional in Anand Rathi Wealth Limited. If I have to convince somebody, I have to present math to the board. Mr. Rathi is not obligated to present math to somebody. Okay, at least in an unlisted company of his, because he's the chairman. So he does not have to make so much math to convince another person. So one which I see in Ultra HNIs and HNIs, one thing which is common is their desire to protect wealth more than grow wealth, which I think is incorrect, and that's what you're here to correct as a wealth manager, right? That's one. Second is the respect for mathematics. And the process is more in professional Ultra HNIs than business owner Ultra HNIs. That's the second thing. Third, if your backdrop has been very modest, you are okay to have mathematics as the backbone of decision making. Tier 2 city people who become Ultra HNIs coming to metros have a very different behavioral pattern. So these are different variables other than just the money they have, is what I'm trying to highlight.
Wow. So you're saying that the Ultra HNIs try to depend as much as possible on math if they are from the other side of the background, and if they're businessmen, they work more on intuition. And you, when you meet them, you have to also frame your questions and answers in these formats, right? When you talk to them.
Correct. Yes, absolutely.
Very interesting. And let me understand one more thing. Now, let's say there is an HNI and an Ultra HNI. How are their portfolios, structured, right? Because if you ask for a retail audience, there'll be 80%, 90% in small caps, right? Because they want to grow wealth at a very fast pace. Let's say somebody who's already built insane wealth. How do they structure their portfolio?
This, if left to themselves, or to several wealth managers, it'll be structured in a certain way. Okay, just because it's popular doesn't make it right.
Correct.
Some great wise man had said, what is obvious is obviously wrong. Okay, what am I trying to get to? How are they currently positioned? They have lesser amount of money in equity than a retailer.
Really?
Which I think is not making any sense.
Okay.
Why should a retailer, like, of course, going the other extreme and having small cap only could be a different ball game, and that might not be right either. But if I'm an Ultra HNI, if I have 500 crores, right, my seventh generation can actually retire.
Correct.
Right? So if I am not a risk taker, and if I take calibrated risk, time will correct that risk. I don't have to correct a risk which time can correct. Now, for example, equities is like you get a scratch on your hand. That's not cancer. If I scratch myself, with time it'll heal.
Correct.
But cancer compounds with time. Okay? Zakhm reduces with time. So if I have 50 years to invest, do I have to ever be worried about equity for 50 years? Even the most pessimistic person on this planet will say Nifty will deliver more than 6% in a 50-year holding period. Right? I want to meet this guy who says no, even on a 30-year holding period, debt will underperform equity. Then companies have to shut.
Yeah.
That's against the principle of finance. If equities deliver lesser return than debt, then why would anybody be in equity? So companies need to shut. So point I'm trying to make is, left to themselves, they'll have low equity. Left to a wealth manager, they'll surely have low equity, because wealth managers have this big bad habit. I used to have the same bad habit. That I like when you step into a room with a client, prospective client or a client, I'm trying to gauge इसको सुनना क्या पसंद है. और पोपट की तरह वही बोलना है, मुझे तो मेरे चेक से मतलब है, चेक लेके जाना है. So what happens is, everybody is trying to calibrate their conversation of what will sell rather than what should be sold. Protection will sell. Somebody is sitting on 500 crores, so he's worried. Right? अभी तो इतनी मुश्किल से 500 करोड़ आया मेरे पास, इसको बचा के रखता हूँ. So if I sell my service around protection, it'll have takers. That's not the right thing to do. You got 500 crores. If you try and protect it, you will get to only 1,000 crores in 10 years. Correct. If you do be sensible with your money, you will be at 2,000 crores in 10 years. And you still have 1,000 crore buffer. गलत भी चले गए, 1500 पे तो land करोगे. So wealth managers, left to wealth managers, there'll be hardly any. And there will be so many complex products. I've seen one portfolio. How funny could it get? Again, irony died a million deaths when I saw that portfolio. The guy's got 800 crores. Okay, has only 120 crores in equity and 38 crores in the most exotic products possible under the sun. Okay. 3 unlisted companies for 3 crores. Some private equity, some AIF, some REIT, some InvIT, some everything under the sun. And his asset allocation is only 15% in equity.
And rest of it is?
Rest of it is in debt. Okay, what I'm trying to get to is, if you want to increase what is the expected return of this portfolio? 15% in equity, delivering 15%. Some 4-5% in really, really exotic, interesting funds. He has a wine fund. He has an art fund. Matlab, think about all the interesting conversations one could have on a coffee table or a table with some alcohol on it could be done with that portfolio. और 80% पैसा डेट में पड़ा हुआ है. डेट में 7% कमाओगे. उसमें he has lent to exotic debt, lending it to builders through a platform where if he gives the fee and gives the tax, he'll be left with only 7.5%. So the expected return of the portfolio, by whatever stretch of imagination, does not exceed 9.5. He could have eliminated all the complexity, added 5% more to equity or 10% more to equity, and achieved the same expected return of the portfolio. Sharpe Ratio, William Sharpe जो है ना, वो अगर ये पोर्टफोलियो को देखते तो खून के आंसू रोते कि भाई मैंने बोला था कि आपको base of the cake change नहीं करना. He won a Nobel Prize to say don't change the base of the cake. You have the same sponge kind of looking cake. Change the icing. But people are changing the base of the cake by having wine, art in their portfolio, and they've not used the most important Brahmastra. Everybody in English will tell you asset allocation is the most important. Correct. That is only to speak. When it comes to portfolio creation, Ultra HNI wealth managers are disrespecting the asset allocation the most. Is the point being made.
But why is it? Is it because, as you said, they want to just say yes to the customer because he has 800 crores, for example?
There are several reasons for it. Who am I to comment? But when I used to do it, in ABN AMRO, I used to work till 2010. It's been about 13, 14 years I have been in Anand Rathi. I used to do it to increase my odds of taking a check. Okay, that was my reason. And जब उठा तब हुआ सवेरा. मैंने अपने आप से माफ़ी मांगी, क्लाइंटों से भी माफ़ी मांगी. मैंने कहा सर अब now I will not doctor my advice depending on what is the probability of its acceptance. Right? I am going to, this one reason was that. Other people could have different reasons. Second reason could be engagement with clients. See, if I say I'm doing the same 14 mutual funds and 3 structure product 2000th time.
Yeah.
What will I pick up in the call and tell my client who's there with me for 20 years?
So you want variety.
You want engagement.
Yeah.
As a company, most companies are saying कुछ नया दूंगा तो मेरा रिलेशनशिप मैनेजर जाके 13,000 परिवारों से मिलेगा. कुछ ना कुछ तो धंधा आ ही जाएगा यार. 2 लाख करोड़ है, उनमें से सिर्फ 99,000 मेरे पास है. 1.5-2 लाख करोड़ बाहर पड़ा हुआ है. कुछ भी इंटरेस्टिंग बनाऊंगा तो 1,000-2,000 करोड़ तो आ ही जाएंगे. So that could be one more motivation. Third is like the Pepsi and the popcorn strategy in a movie theater. Lower Parel में थिएटर में जाता हूँ, इतनी कंफर्टेबल सीट 300 रुपए में टिकट मिल जाती है मुझे. पॉपकॉर्न जो मैं बचपन में 4 आने में खरीदता था उसके 600 रुपए ले रहा है बंदा.
करेक्ट.
भाई इन मुंबई इज द मोस्ट एक्सपेंसिव रियल एस्टेट. लोअर परेल में आपको पता ही है, निकलते हैं तो 2-2 किलोमीटर के लिए 4-4 घंटे लग सकते हैं. मतलब सच अ कॉन्सेंट्रेटेड स्पेस. उधर 300 रुपए में तुम्हें इतनी कंफर्टेबल सीट देता है. 500-600 रुपए में पॉपकॉर्न बेचने की क्यों जरूरत पड़ गई? सीट पे लॉस बनाओ और पॉपकॉर्न में पैसा बनाओ. वैसे ही वेल्थ मैनेजर म्यूचुअल फंड सस्ता कर दो और एग्जॉटिक प्रोडक्ट महंगे में बेच दो. ये रणनीति काफी कंपनियों ने, इसको कहते हैं हमारी कंपनी के लिंगो में डबल डिपिंग. यू आर डिपिंग योर स्ट्रॉबेरी इनटू दिस चॉकलेट एंड मिल्क चॉकलेट. That's called double dipping.
Wow, I heard about this. So I was in IFL when I started my career 6 years ago on the wealth side, but not on the RM side. So I used to see what was happening on that side as well. But that time I remember there was a trend, not just with one company. Let's say many companies used to always keep changing the allocation of the client into one product, then after 2 years into another product, and there was some fees attached to the fluctuation of that changes as well. Right? Do you think this will eventually recover or stop? Because this has been a practice from a long time. I feel both sides know it. It's not that the HNIs don't know this as well. But do you think this is evolving and becoming better? Because now we are growing into a huge industry and many billionaires are coming out, many millionaires are coming out. Is it changing?
Shashank, like you mentioned one company's name, right, which you worked for. We saw that sign in a few of our relationship managers as well. Right? मैं किसी और का क्या कहूँ? हमारी कंपनी में हमने एक स्टडी की 2015 में that there were some changes which were not motivated by client objective. Okay, in 2015. Okay, let alone the company which you work for. Yeah. That happened in our company and we did the study. When we did the study saying that यार ये बदलाव की तो ना तो सेंट्रल टीम ने कुछ दिया है बट ये बदलाव हो गया. So 2016, Anand Rathi was one of the first few companies, if not the only wealth management company, which wrote to all asset management companies saying that हमें upfront commission नहीं चाहिए. 2016 में, this is on record because I've written this to all asset management. We abolished upfront commission in mutual funds. In 2018, the regulator came and said and abolished upfront commission. So that in mutual fund has been addressed. Okay, when I joined the industry, there used to be entry loads. कि भाई साहब ने अगर किसी ने 1 करोड़ का चेक दिया म्यूचुअल फंड में, पहले दिन ही 2 लाख रुपए निकाल लिया जाता था अपनी जेब में. That was called upfront load was there. That load was abolished, but still upfront commissions were there. Now mutual funds don't pay, equity mutual funds don't pay upfront commission, thankfully. So the alignment of my revenues with my client is seamless in mutual fund. But that's not the case in all product lines, right? That's not there in all product lines. You would notice that from 2013, when advisory license was introduced, RIA license, Anand Rathi Wealth never took the dual path of doing a distributor and an advisor.
I've seen that.
We've only been distributor. लोग कहते हैं तुम एडवाइजर क्यों नहीं बनते? सब वेल्थ मैनेजमेंट में 2 भी करते हैं, दोनों करते हैं. दोनों करना प्रिंसिपली गलत है, राइट? या तो फिर अगर मैं 1100 करोड़ की रेवेन्यू कमाना चाहता हूं, या तो फिर पूरे 1100 में क्लाइंट की जेब से चेक लेके लूं. जिस दिन मेरी वो हिम्मत और जरूरत होगी तो मैं करूंगा. When you look at so many wealth management outfits which do both, 10% comes from advisory, 90% comes from distribution.
So why even, yeah.
But 90% of the clients are told advisory.
I get it.
Most of the, if you ask an RM, you've been in the wealth management, so you ask an RM, कितने clients से तुमने advisory की बात की? बोलेगा 90% of the clients I do advisory. But when you see the results or unlisted company, how much did you earn as a company from distribution and advisory? You will see exactly the opposite. Now, इससे ज़्यादा मैं industry की बुराई नहीं कर सकता industry में रह के. अब बाकी homework करना है लोगों को.
Improving? Do you see now? Is it improving? Like, there are many other outfits, let's say smaller ones as well, who are coming up in the wealth management space. New RIAs, new RAs. So are they following a better route, or are they following the same incentivization route?
I think the smaller ones, the boutique ones are following because there is courage, there is lesser people to convince. I've seen several wealth management outfits, especially large ones, which are now getting private equity funded, are going on the path and double downing on the wrong path. And it hurts me to see that, right? You have to have courage to say, either I'll do distribution or I'll do only advisory. Any company which says I'll only do advisory, I will respect them the most. In fact, I'll let a couple of clients go, refer them my clients too. If they can have the courage saying that मेरी company अगर client से लेगी तो किसी से नहीं लेगी, या किसी से लेगी तो client से नहीं लेगी.
Have one path.
One path, right? You can't live two lives, especially proportions are different.
Okay, now I have another question. Let's say there are two types of HNIs. One is a guy who has 5 crores. You know, abhi IT, ESOPs, etc. has come out, or maybe something has happened. Then there's a guy who has 50 crores. Little legacy wealth has built over a period of time. How would a good portfolio allocation look like? I would say an ideal portfolio allocation look like for a 5 crore guy and a 50 crore guy. Would it be the same or would it be different?
It would be depending on 3 questions which I ask him.
Yeah.
Right? Be the size of the portfolio. The good part about investing is, now there's one, Mera Sala hai. You know, he got some really hundreds of crores. Okay? Uska portfolio और मेरे 10 crore का portfolio client का भी identical है. Okay? It can be identical, it can be completely different depending on what is your barometer of success of a portfolio. Okay? It can be return, it could be risk, it could be risk-adjusted return. I personally think risk and return are 2 sides of the same coin. You can't see each of them in isolation. You have to see both. So the right barometer is risk-adjusted return. If you come from the same school of thought of Anand Rathi Wealth or Feroze or my boss, Mr. Raval, you would say risk-adjusted return is what should be the barometer.
That's the holy grail kind of a thing.
Correct. Then comes the second question, which is begged. What is the unit of measurement of risk-adjusted return? Like length can be measured in meters, centimeters, right? Or inches and feet as well. Like weight can be in kg and pound. Risk-adjusted return can be measured in 4 things. Sharpe Ratio, Trayer, Sortino, and Jensen's Alpha. Yeah. If you asks Anand Rathi Wealth colleagues, they'll say Jensen's Alpha is Bible standard or best gold standard. Gold is too volatile lately. But yeah, silver standard to बोल नहीं सकते. Gold standard ही लेते हैं. Yeah. Gold standard for risk-adjusted return measurement of a portfolio. And Sharpe Ratio is the gold standard to measure risk-adjusted return of a single product. So if my client says, I want a Jensen's Alpha of 5%, which means, I'll explain for the benefit of the viewer, it's so simple to understand. Every investor deserves a certain return for the risk he took. Okay. If I didn't take any risk, I deserved 6.5. If I took half the risk of Nifty, I deserved maybe 9. If you got 13 minus 9 is the Jensen's Alpha. Jensen's Alpha is nothing but the extra return you made, more than the return you deserved for the risk you took. So if my client, 10 crore client says, मुझे 5% का Jensen's Alpha चाहिए, then the strategy will remain same. With the 100 crore guy also says 5 का Jensen's Alpha चाहिए. Which I think should be if you're doing all the menace of engaging with a wealth manager, you should at least get 3.
Okay.
Anand Rathi clients get 5 to 6. Anand Rathi Platinum clients have got 9. But at least a client should get 2, 3. I have seen multiple, and I can't even tell you, 90% of India's Ultra HNI portfolios operate at negative Jensen's Alpha.
Negative.
And they don't know it.
But they don't know it. But how does this look? Like, how does an ideal portfolio look? If you say asset class-wise, equity, let's say debt, I don't know. That is why I'm asking. How would it look? How would a Jensen Alpha 3 or a 5 look like? Average. So
there are different ways to achieve the same objective. But you're being modest when you say, I don't know. You've been from the industry. Thanks. I love that. It's quite appealing to see that kind of modesty in a popular podcaster like you. Having acknowledged that, let me tell you that 65%, I would say 65% in equity mutual funds, 35% in structured products. This too with certain degree of leverage, which might be too unique for an Indian context. 10 to 20% I take leverage, and that can get you a 15.5% return compounded at 11% Nifty assumption.
Okay, understood.
And a beta of 0.6. Beta implies that 0.6 of beta implies you've taken only 60% Nifty risk. 2 beta implies, for the benefit of the viewer, twice the risk of Nifty. And a Jensen's alpha of this could produce to be almost about 5 to 6%.
Oh, that's crazy. Okay.
So this strategy, 65-35 with 10 to 20% leverage for a non-platinum client is what we do. If it is a platinum client, there are 3 layers of efficiency which can be produced to take the Jensen's alpha up to 8-9%.
So, Feroze, as you mentioned, 65-35, right, into structured products. Now, for the general audience, what is a structured product? Because we don't get access to this. So, what is the structured product?
Correct. So, before I say what is structured product, I'll tell you why I got interested in structured product way back in 2006, July, when the first structured product in India was launched. It was launched on the erstwhile Reliance Asset Management Company's PMS license. Merrill was the first issuer. Why I'm in love with this product is, if you calculated it mathematically, of course most people don't, the Sharpe ratio of Anand Rathi structured product, for example, for say, comes as 2. Which means for every step in risk, you get 2 steps in return. That's what Sharpe ratio in a simple fashion means. 1 kadam risk कर लूँगा, 2 kadam return के मिले तो बहुत अच्छा है. 1 kadam risk कर लूँ और आधा कदम return में मिले, disappointing, right? So Sharpe ratio is the highest I have seen. Somebody in any product line. Feroze might not have seen everything, but at least for what I have seen in my last 21 years of being a product and research person, I didn't find. So that's first. So that audience is worth enough whether you should know this or not. Yeah. Structured product is nothing but a bond.
Okay, it's a debt product?
It's like a debt product. So let me finish. Paper ले लिया आपने एक company का. It's like a promissory note. Okay, bond में क्या होता है कि you give 2 lakh rupees to a company. The company says, I've taken 2 lakhs from you. Here goes a paper where I'm promising to return this 2 lakhs to you. And in the meantime, I'll give you 9% interest. So you left home with 2 lakh rupees. You came back with a piece of paper. This is called a bond. Yes. Correct? Structure product में छोटी सी बदलाव है. You took your 2 lakhs, if you could, right? And you gave it to the structure product issuer or the company. The company gives you a paper, but instead of writing 9%, he says, I'll give you a very varied payoff. If Nifty does very well, for example, I'll also give you 15%. If Nifty does very badly, I will also give you 0. Okay. Or sometimes negative also. Okay. So you came back home with a paper, but in that paper, instead of writing a fixed number of 9%, it has a variable number varying with respect to a certain index. Okay. Generally Nifty. Anand Rathi does Nifty and Sensex because those are popular indices. Now comes the question, you came back home and said, if God is kind, I'll get 14% also. Correct. If God is unkind, I'll get nothing. Right? So then comes the question, what are the chances that you will get 14? Correct. If you have a very good chance of getting 14, let's assume you have a 90% chance that you will get 14, and there's only a 10% chance that you will come back, you will get only back your 2 lakhs, then this is a very attractive structure product. So you can back test whether this specific structure product, if I did every single day, ever since Nifty started, how many times would I have won or lost? So Anand Rathi only passes those as approved structure products which have a 85% plus probability of winning, right? So structure products are nothing but bonds which give you a varied payoff. Varying with what? Not the mood of the company. With respect to Nifty, which is a publicly published number. Correct. So you can see the television and say, nahi bhai, tujhe 2 lakh nahi, mujhe 4 lakh dene ki zarurat hai. And he can't say no. So as long as he has to fulfill his promise. That's a structure product.
So what are the constituents of this? Like for example, as you said, it's like a bond. What is it backed by different type of bonds accumulated together, or is there a portion of, what is the constituents?
Now, what is this guy doing with my 2 lakhs? Correct. That he's producing 14% or sometimes producing 0. Correct. So different products, most products will have 2 components to it. He will take your 2 lakhs, one, lend a portion of the money at 10% to somebody else.
Okay.
He will still have some more money which he will participate in derivative in a calibrated fashion. So it will have debt and certain derivative. This combination will exactly replicate what is given on the paper to you. Now what are the risks? इसने उधार किसी को दिया, मेरे 2 लाख रुपए उधार दिए, वो वापिस ना दे तो, या डेरिवेटिव ठीक से मैनेज ना करे तो, then the company will be bankrupt. How will he pay me my 4 lakh liability if he has to pay me after 5 years? Because if you compound your money at 15%, hypothetically, he has to not just give you 2 lakhs, but he has to give you 4 lakhs. You saw the TV saying that 4 lakhs लेने जाता हूँ, कंपनी पे लाला लग गया, वो देखी थी ना हमने 2 पिक्चर बिपाशा बासु और अक्षय कुमार, तो कहाँ से आएंगे 4 लाख रुपए?
करेक्ट.
कौन सी पिक्चर थी?
लक्ष्मी चिट फंड वाला.
ओके, लक्ष्मी चिट फंड. अब वो पैसे देने के लिए नहीं होगा तो क्या करेंगे?
करेक्ट.
Right? So derivative has to be in a calibrated fashion. Lending has to be done very, very carefully. So this two as a combination replicate the payoff committed minus the distributor's commission. Okay, when I'm a listed company, I do structured products of another company, which is a sister company incidentally, and another external party also. I make 1.2% per annum compounded. Right? So after all commissions of the distributor, you should be left with 14.5% to give the client.
Yes.
Now that's what is the management all about. And the management of derivative can happen on some guy's human intervention. It can also happen without mechanically using Black-Scholes pricing model. I'm giving this word Black-Scholes. Of course, it sounds more complex. These are the two gentlemen who won a Nobel Prize to price derivatives. If you have anything to do with derivative, and if you're not reading up every day half an hour on Black-Scholes pricing model, you're doing disservice to your money. Okay, and it'll take you a good 1 year to understand Black-Scholes pricing model. Is why I'm telling you that you should read up, especially in the AI zamana. Explain Black-Scholes in a simple fashion. बोलोगे prompt, तो कुछ तो को देगा, थोड़ा देगा, फिर उसके बाद आपको कुछ समझ में आएगा. But if you have anything to do with derivative, you should know Black-Scholes pricing model.
Wow. So this is a very good insight into structured products. So that means you are also saying that, so you have this model, but there are varied type of structured products, because here the permutation combinations can be a lot, right? There might be very aggressive structured products. There might be non-aggressive as well. Does that happen in the market? Are there such products?
Absolutely, Shashank. Your wealth manager experience is talking, and not just talking; it's screaming in this question.
Yeah.
Yes, this is what I learned the hard way. I used to work for a company called Relige Macquarie for a couple of years before I came to Anand Rathi 13, 14 years back. You can do just 1 million combinations with derivatives and debt. And I used to do so many different combinations. I used to feel excited. Ye lo naya recipe. Ye lo naya recipe. I used to do that. Some used to bomb because I was not testing them, back testing them enough.
Yeah.
Right? There is also something called front testing. Huh? And because you've also told me that you got sophisticated, intelligent, very interested audience, you can not just back test in the finance world. You can front test in the finance world. There's something called Monte Carlo simulator. Monte Carlo simulator simulates to you the next 1 lakh Nifty years and tells you what all could happen. An expert I can't call myself an expert. On TV, if you hear an expert, he will tell you, ye hoga. Monte Carlo, ye hoga nahi bolega. Ye ho sakta hai bhai, tayar ho ja. So I used to do this mistake of getting too excited, being a technical guy, saying that ये सब combine करके मैं 1000 अलग किस्म के product बनाता था Relige Macquarie में, right? कि यार 10 तो bomb कर गए because you didn't test them enough. Yeah. So in Anand Rathi मैंने प्रण ले लिया कि भाई वही boring काम मैं करता जाऊंगा. So all the products which I currently do, ironically, I'm doing the 200 and 2,500 at the time. So one client lately I was speaking to, he says, what the same shit you're talking? Sorry for the language, but this is what he exactly quote unquote told me. I said, Sahab, I'm not here for entertainment. तुम्हारे पैसे बनने की संभावना बन रही है, तो why will I change? Yeah. It will quench my thirst of intellectual stimulation. But is that what you want your money to be put to use? So structured products have to be done on back test, front test. Don't innovate more than needed, because you can innovate. I can innovate like hell because I have 21 years. I have seen a derivative terminal ever since I was there. That was my first decision when I came into workforce, saying that I will not learn cash market, I will only learn derivative market because koi seekhna hi nahi chahta derivative.
It's crazy because you can go to sharp levels as whatever you want in that kind of a product, right? Wow. Very interesting. But I like this because in US, I think most of the hedge funds, they don't talk about returns. They talk about risk adjusted returns. Most of them have their Sharpe ratios. They literally gloat their Sharpe ratios and, we have achieved 2.1, we have achieved 2.4. Like I watch Bridgewater and, all of these guys. So they only talk about this. But very interesting. I wanted to understand this, right? Now, coming to another question, because we spoke about structured products and all of that. If I talk about AI, let's say that, in the world of wealth management, RMs are very important for every company, right? And every company, any con call, we only talk about the number of RMs growing, attrition of RMs, and the AUM size of an RM. But with AI growing, do you feel that in the future, will AI bridge the gap between you and your client better than an RM? Or will RMs be required, but it'll be less compared to what it is today?
Yes. Now that you spoke of one which is a sharp on the previous question, I would like to comment that because there's a bridge between your second question. You also spoke of AI in the second question. You spoke of Sharpe ratio in the previous question. Yes. So we used AI to create a code which can give you all the statistical blood report kind of report to your mutual fund portfolio for 20 years. We've built that model already. So if Shashank were to put one single OTP, it will pull all the information from the back end of ever since Shashank ever invested in his PAN in mutual fund industry. Will pull that. It might have, let's assume, 2,000 transactions. It will calculate your beta. It will calculate your daily portfolio value, closing value. It will calculate your Sharpe ratio. It will calculate your Trayer, Sortino, Calmer, all the possible ratios and give you a blood report like an equivalent to a wealth report. And this is what I'm going to check before I onboard a client.
So you're the doctor who's going through it.
I'm still the diagnostic. Okay, first, I would not want to make my job so holy that I would want to compare it. First, I'll do the diagnostic. And if the report says Shashank needs me or my company, is when I'll take it forward. If Shashank already is doing very well, should I force my services on him? I shouldn't. So no wealth management in the country is wanting to reject some prospective clients. I want to reject some prospective clients because they're doing well. Why should I go? So that one report using AI, I can today already it's being tested. So someday I'll make it free for your audience. They can just use that technology and see whether they're doing okay. If they're not doing okay, if they're taking more emotional decisions, it'll tell you. When the market was down, people had more debt. And the same person had lesser debt when the market was up. Actually, it should be vice versa. Correct. So it will tell you whether you're being too emotional with your money and your asset allocation or you're being right. So that's where we used AI. Do I want to, as a company, use AI to replace my colleague? Absolutely not. Would I want to use technology to make my colleague more powerful if I can't love my colleague? And as a joint CEO, if I'm thinking इनको 393 वालों की नौकरी खा के मैं अपनी profit कैसे बढ़ा सकता हूँ? Then you should not trust me as a client. Right? See, it's counterintuitive. I like my colleagues, 393 relationship managers. I will want to augment them, make them stronger. Can he handle 80 clients instead of 50? And still not compromise Anand Rathi's service levels and expectation. Then trying to say, can I replace him and make more profits for my shareholder? If you have attended any shareholder call, I said my first most important stakeholder is colleague. If he is happy, he can make client happy. If client and shareholder, colleagues are happy, shareholder in long term will have to be happy. So I will never, at least in the foreseeable future, till I am there in this company, it has to stand the test of both the joint and CEO. So I think that technology has huge power to deliver expected outcomes to the client and allow the RM to manage more clients correctly without disappointing them.
Got it. That actually makes sense. So your RM to client ratio will look much better.
Much better.
Instead of hiring many people and taking less clients. Okay, got it. Beautiful. Now, I want to ask you two last questions, okay, because this has been very insightful. What is the biggest mistake you have seen commonly in the industry when someone becomes rich very fast? What is the biggest mistake they usually do? Because I'm pretty sure most of them who become rich fast, whether from tier 1, tier 2, they don't know what to do with such kind of money. So what is the biggest mistake they do first?
When somebody, let's assume somebody has worked for 5-7 years, had a startup, okay, and then he gets into money by a 20% dilution.
Yes.
That's one case, right? Suddenly a person was living hand to mouth because running a startup, all of us know how difficult it is, right? Suddenly he becomes, let's assume $300 million valuation and he gets about $50 million. $50 million is reasonable amount of money, right? 400 crores. The first intuitive reaction is, isko sambhalna hai. Zindagi mein maine 400 crore nahi dekhe. Right?
Yes.
There comes newspaper padhta hai wealth manager aur bolta hai iske paas paise aaye hain. Any private equity deal or large real estate deal gets published on newspaper. Immediately they flock on the door. And that guy is already, first time he's seen 400 crores in a bank account. Right? Usko bolo ki tum paisa sambhalo. कुछ मत करो 400 को रहने दो भले ही 10 साल में 600 पहुंचे. So most people when they've seen large bank account credits which they've never seen in the order of magnitude in their bank account, they emphasize risk as the only coin to serve, only one side of the coin to serve. And that's what wealth managers are capitalizing on, that emotional aspect. See, if 1.5 years time correction has happened in the market, like Nifty in September 24 was greater than where it is today, right? Or tomorrow. टाइम करेक्शन 1.5 साल का हो गया, अर्निंग्स बढ़ गई 16% से, राइट? प्राइस करेक्शन 3% का हो गया. अब इसके बाद भी कोई कहता है ये स्टैगर करके डालना, 30% ही डालना, वो भी स्टैगर करके डालना. Then what do you want Nifty to be at 0 to buy it lump sum? Right? So you have to be weathering the volatility. So that's one error which people who come into big money at once. Second is people when they do real estate transactions, when they come into big money, they, we are India, right? Real estate in tier 2, because you mentioned tier 2, comes with large other components, other colored money. Whenever I've interacted with people and said that tum ye land deal kar rahe ho, but compromise on price, but please understand the power of money in bank accounts.
Cash in hand.
Cash in hand, not literally cash in hand. That's what you should avoid.
Yes.
गद्दे के नीचे पैसे में और बैंक अकाउंट के पैसे में पावर अलग है और स्ट्रेस लेवल्स अलग है. My binti to everybody, I know it might sound a little out of context. If all sellers put their foot down, कि भाई लैंड डील में भी मुझे I want to have and pay my taxes, especially when the government has said 12.5% में आप छूट सकते हो, तब भी मैं कोई अल्ट्रा HNI को देखता हूँ कि यार वो 10 करोड़ कैश एक्सेप्ट करने के लिए तैयार है, 30 करोड़ कैश एक्सेप्ट करने के लिए तैयार है. मैं बोलता हूँ 12.5 से नीचे क्या टैक्स होगी यार. इंसिस्ट दैट मैं तेरे साथ डील नहीं करूंगा अगर तुझे मेरी लैंड पसंद है तो वाइट पैसा ला. दैट हैज टू चेंज इन इंडिया व्हेन द गवर्नमेंट हैज डन इट्स पार्ट. हम हर बजट में खड़े हो जाते हैं क्रांतिकारी की तरह, मेरे को क्या मिला. 12.5 पे रियल एस्टेट एंड बेस्ट ऑफ बोथ वर्ल्ड्स इंडेक्स्ड और 12.5 इज द वर्स्ट. फिर भी अगर कोई कैश एक्सेप्ट कर रहा है इस देश में और खुद को नेशनलिस्ट और समझता है तो इससे बड़ा भ्रम क्या होगा.
Because you'll anyway make that back in a few years. I mean, barely.
You'll break even in about 15 months, 12 months, 13 months. And so we are not insisting enough. I think that people, it's not hitting them hard that real estate की tax का ज़माना गया. आप tax नहीं बचा रहे हैं, seller बचा रहा होगा. मतलब seller नहीं बचा रहा है, buyer अपना जुगाड़ कर रहा है. Sellers have to put their foot down that I'm ready to pay that 12.5% tax, which is the worst soft tax. Government gave you an indexation benefit. You know, ancestral properties in South Mumbai especially are tax-free today. Why? Because they changed the indexation year to 2001. Right? There was one bungalow. Okay, I'm giving you this example. How taxation, if applied mind, legitimately you can save tax. One guy had bought a bungalow in 1964 for 64,000 rupees. Named it after a dog. Because the puppies it gave, okay, I don't know the breed, got him enough money to buy that house. Can you believe it? Back then, that was a case study. He was selling it for 30 crores. And he said that tax, tab ki zamane ki 6 crore ki tax thi. But there is one circular which in one of the budgets government gifted to all of us who have ancestral property that you can value the property as of 2001 and then index it. So we valued it in 2001, it was 8.5 crores. So his deemed purchase value becomes 8.5 crores. And then when you index it, it came to almost 31 crores of value, indexed value. So he paid zero tax. In fact, he got a tax credit back then, which now you can't use. So I am wanting to use your podcast to highlight that real estate taxations are very, very different. Government has done its bit. It's us who need to change and remember that real estate is not more taxed than the way it is. And try and bring it to mainstream so that you can make that money far more powerful. I'm not trying to say it so that Anand Rathi mein aur paisa manage karne ke liye aaye. I'm just saying.
But I get the point because it is so low cost right now. Yeah, fair enough. Okay, so one last question. Okay, we've understood and learnt a lot about the rich and the behavior of the rich. Now, one habit you feel that a retail guy should pick up from what the rich people are doing to have a successful journey in the market, what would that be?
I might sound repetitive. I will also tell you what HNI should pick up from retail.
Yeah, please.
Okay, which seems quite counterintuitive, right? And they have something to teach the rich. I think one thing which the retailer should learn from the rich is to not spend to look rich. I'll explain to you. Most of the people who have not become HNIs are buying stuff to look HNI.
Very interesting. Okay.
That is why their savings are getting dented. Okay, this has got nothing to do with investment. This has got to do with the discipline of investment. Okay, I met a gentleman who is buying stuff, superseding his salary, all branded stuff, so that he can carry it and look not out of place in an HNI party. And I was speaking to another guy who owns 3 luxury brands for India. He says, I am not, my customers are not HNI only. You might be very interested in my clients. I said, your clients will not buy because they've already arrived.
Yeah.
Only the guy who's pretending to be arriving is the guy who's spending on my brands. So please don't do that. Always reverse the equation. Salary minus investment equals spending. Rather than salary minus spending equals investments. ये equation को बदला दोगे तो HNI बनने की संभावना near 100% हो जाएगी. Because compounding भी कोई चीज है ऊपर वाले ने दी है वो कर देगा.
And what should HNI learn from the retail?
HNI, unfortunately, especially after COVID, has become more emotional. You see, in COVID year, I was doing a study. Okay, in COVID year, so ironical. 2021 FI. You total up how much did HNI sell from equity in PMS and equity mutual funds. You will get a number of anywhere between 2.5 to 3 lakh crores of equity mutual funds and PMSs were sold in a year where Nifty averaged 10,700. In that same year, retail bought 91,000. What is happening is because the quantum of money for an HNI is large. See, if somebody's got 100 crores on a budget day, if he says 3 crore ud gaye, I have to empathize with that gentleman. 3 crore ud gaye in absolute terms is a large number. Retail can see it as 3% उड़ गए. But he's going to see it as 3 करोड़ उड़ गए. तो जो जज्बाती हो रहा है HNI, retail is becoming lesser and lesser जज्बाती, and HNI is becoming more and more जज्बाती. I can give you data after data. Just look at the worst 5 months of the last 2 years for markets. You see whether SIP numbers were bigger or not. They were bigger. Okay, because it's gradually growing. Like April, this year, this financial year, Trump on 7th woke up and said, Liberation Day for the US. Equity markets in Nifty went down to 21,700, closed at 22,200. That year, HNIs sold. That's month. The net flow was negative of HNIs. But retail bought. So retail has become very disciplined oriented. He is treating mutual fund as a saving instrument, not an investment instrument. But HNI is not seeing it as a saving instrument, put it, shut it, forget it. He's not able to do it. We are trying to counsel and most of our clients are able to do that. Is why Anand Rathi's clients, it might sound a little more pompous, but yeah, at the cost of that, on behalf of all the team members, I take immense pride as their representative that Anand Rathi Wealth bought equity mutual funds in that year for HNI clients. Most wealth management outfits in the HNI space will not be able to throw this data of AMFI.
Wow, it's so counterintuitive, right? Because you would expect the retail to sell when the markets are bad. I remember this even in the Russia-Ukraine wartime, the SIP inflows were going up and the market was actually confused that retail money is still coming, SIP money is coming, the net inflows are good. But the market was falling at that point, which shows that the new guys who are coming in the market are very smart when it comes to investing. As you said, the saving culture has come in now.
Thanks to the fraternity who are doing responsible social media journalism.
Yeah.
I might want to give you that credit because most people are people who are following podcasters like yourself, the ones which are credible, who have stood the test of time in finance. I think that is, and I'm not saying it because I'm sitting with you.
Yeah.
There's people, and people are also forgetting. We might say HNI has made lesser money than retail because if you look at the kind of volatility, Nifty went to 21,700 on the election day last July, 2024, June-July, when the election counting was happening. It went back to 25,000, went back to 21,000, went back to 24, went back to 22.5. This whole paper ka jo concept tha, rupee cost averaging, has actually transpired. I was seeing a statement of the last 1.5 years. The mutual fund return is 11%. Nifty is down 2%. So retailers are not seeing such bad statements because of actually that rupee cost averaging has worked in this period like a textbook definition.
But what do you have a notion now about India? Let's say we have had this long time correction. A lot of new investors are taking the beat of this and they're also a little frustrated saying that bus ho gaya abhi, chalo, let's go ahead. What do you think in the next 3 to 5 years, perspective of India?
See, P's depend on two things, earnings and demand and supply. Okay, demand and supply has a very large role to play, which is underrated. P's are, now why is a company which is growing at 8% in Nifty at 70p? Solve it. And I know some study there, which was a revelation to me. Coming back to what I think about India is, India's P's will not compress. Nifty will deliver those median returns, which are 11, not mean returns. Mean returns are 14, median returns are 11. It can deliver 11% compounded. Small cap stocks can give you more than when people are more scared, because small cap is in English small cap, but now the largest small cap is 60,000 crore market cap, right? It used to be called small cap 10 years back when the largest was only 7,000 crores. That time also we had the same English name. Today we'll also have the same norm. So it intimidates. So small caps will do well. FII can sell, no problem. Like last year was the worst FII year in the history, 1,66,000 crores. But don't see that as an FII sale. See it as a proportion of how much did DII buy. DII bought 7,80,000. इतना बेचने के बावजूद वो सिर्फ 20% बेच पाए जितना DII खरीदा. That then brings us to the question which is begged, क्या DII खरीदेगा और अगरचे खरीदेगा तो कितना? मेरा ये अनुमान और expectation है कि in the next 8 years I have tried to use some degree of regression to extrapolate the retail or coming through DII. 55 lakh crores की purchase अगले 8 years में आएगी minimum DII से, right? That's the expectation. There were 3 methods to extrapolate it. This is the least extrapolation of 55 lakh crores of DII inflow. Will that give it buoyancy? The answer is yes. Will the markets go down? The answer is yes. Will the gravity of the market be up? The answer is yes. Will it not go down? It has done peak to trough. 14% is the habit of Nifty. 14% तो गिरेगी हर साल. आप कारण ढूंढना बंद करिए, आपको करना क्या है सोचिए.
I love when you talk maths. It's so nice because everything's data driven, right? So it's very nice. But again, Feroze, thanks a lot for this podcast. I loved it. I enjoyed it. And I'm very happy because after looking at your con calls and just reading those transcripts to now sitting and actually having a conversation with you is a big honor for me. And I really loved it, honestly, from the bottom of my heart. Because I think a lot in terms of what you've said, but I got a lot of information on a little bit about the future. I'm going to start reading the Black-Scholes. That's my takeaway, just for my understanding and my learning. But again, good understanding for the retail audience on what happens on the other side. So again, thanks a lot.
Thank you, sir. It's my honor, truly.
Thank you.